Welcome. We're here to talk about gold and silver, but I'm just noticing how pale I look right now, which I suppose is what happens when you don't go outside for 2 weeks because of the weather. So I hope you and your family are dug out and doing okay despite the wild weather. Let's talk about, speaking of wild, the last week in the gold and silver markets. All right, so several factors have driven the huge surge in gold prices in recent years. One of the most important has been the tension between the White House and the Fed, which has raised questions about the central bank's independence and the direction of monetary policy, leading some investors to move money to what they perceive as being a safe haven asset. Equally important is that central banks around the world have been moving off of fiat currencies. Fiat currencies meaning money, whether that's print or digital, issued by governments, and have instead been consistent buyers of gold. Additionally, both metals, gold and silver, have benefited from industrial application, including use in electric vehicles, solar panels, and artificial intelligence hardware. So we had this huge run up in prices for the three aforementioned reasons, but then a collapse in prices at the end of last week. And why was that? Well, it's because of the new Federal Reserve nominee appears to be a reasonable choice, reducing some of the concerns that the market had about Fed independence. So when there's less of a concern about that Fed independence, people have less of a desire to seek the safe haven asset, and prices corrected to the levels they should have been at had there not been that same level of concern. But this isn't the only time that there's been volatility in the gold, silver, and commodity markets. Throughout history, periods of monetary policy uncertainty have coincided with precious metal performing well. In the 1970s, for instance, both gold and silver climbed dramatically as stagflation hit the economy, peaking around 1980. And similarly, both gold and silver rose from 2008 to 2011 during the global financial crisis, and again in the spring of 2020 during the COVID pandemic. So while many investors turn to precious metals as safe haven investments, these and other commodities are still prone to boom and bust cycles. So it's important to view them not as speculative trading instruments, but as components of a broader investment strategy aligned with financial goals. And that broader investment strategy is, to me, the long-term appeal of considering precious metals, is that they have the potential to do well in markets when other asset classes don't. So you potentially have a differentiated source of return. But you can't have both. You can't have an investment that's low correlated and should do well when the broad markets underperform, and also an investment that fully participates on the upside. So for me, the value lies not in their near-term performance, but in their ability to provide a source of return when the rest of the market is in turmoil. Thanks for watching. Enjoy today.